Well, we're one trading week into 2015, and what have we got? Broadly speaking, the deflation scare continues, and the markets remain reasonably confident that the Fed will not be raising rates for a while also being somewhat nervous that the ECB will not be resorting to QE as quickly as it hopes. In terms of the salient points, we have seen a fall of almost 12% so far this year in the price of oil. Continues to be the move that dominates the landscape. The dollar has gained some 2%. Inflation break-evens and bond yields in the developed markets have fallen a little. As for stock markets, the S&P here in the US is very marginally down so far for the year. Most other stock markets have done considerably worse. All of that broadly fits in with the deflation scare. The critical information we had on that this week was obviously from the Eurozone, which we now know does indeed have outright deflation on an annual basis. Also, the unemployment data from the US, which we got on Friday, while giving a very good headline, did also show that the participation rate had fallen back to an all-time low, showing that there continue to be many people who are not even attempting to look for work, and that skews the figures. It also showed that average earnings growth has dropped back down to 1.7%, showing a significant lack of inflationary pressure there, and also showing why Main Street might not be very happy with the conditions that are serving Wall Street very well. For the week that comes, we have a plethora of new data that could be very important. Most importantly, the earnings season for the US gets underway. It's not just Alcoa. We'll be hearing from most of the big US banks in the week that comes. In general, the hurdle that the big US companies have to clear appears quite low. The consensus expectation is for only 4% earnings growth, according to Thomson Reuters, but that does conceal the fact that energy, because of falling oil, is now expected to see a fall of some 30% across the sector. Other companies do still have quite rosy prospects, according to their brokers. Obviously, what is most important is what CEOs tell the markets about the future. When it comes to economics, we get inflation data from the US. Core inflation will be particularly important there. The expectation is still that will remain as relatively high as 1.7%. We get inflation data from Germany. We get economic growth from there as well, obviously also very important in the current environment. But I think the most important strand that people will be following for the next few weeks will be, first of all, asking the question, what will the ECB do? Their meeting is not for another couple of weeks. And also, how long will the Fed defer until it raises rates, or indeed will it raise rates at all? We still have a very high degree of uncertainty as the year gets underway.